All right, we're back with another TD Ameritrade Network video talking about Rivian, the company, the electric truck, pickup truck company, just came out with their Q2 earnings report, and it was pretty good, actually. I'll talk about that in a bit, but let's see what TD Ameritrade have to say. But I have a few numbers on their growth and their gross margins and stuff, so we'll talk about that during the video. So let's check it out. Smash like on this video, subscribe to the channel. Let's go.
Let's talk some autos. Getting specific here ahead of Rivian earnings. Alex Coffey, the other half of Next Gen, joins us. This seems like a big report, Alex, because it had this just a massive bounce in the last 2 months. Last earnings, the market wasn't totally crazy about it, and then it took off coming into this report. So what now is the bar required to be reached by this company?
One has to wonder how much of that was just risk-on sentiment in the market. It's a pretty heavily shorted name, Oliver, even in real time, seeing a 12.8% short interest. The high beta stuff had really been kind of leading the market alongside the mega cap tech rally. Rivian, though, even so, with its nice rally year-to-date of almost 30%, is still down almost 40% over the last 12 months, as that chart illustrates so nicely for us. With this one, though, some things that we're going to be watching and have our eyes on. In particular, EPS is still expected to be quite negative, as one would anticipate in a pretty much up-and-coming name still to this point. It's down, or expected to be negative $1.41. Just shy of $1 billion in revenue, as that's starting to pick up just a little bit. Analysts not super fond of this name, but do lean slightly to the buy camp. About 54% of analysts covered do have a buy rating or buy equivalent rating. 37.5% in the hold camp, and then about 8% in the sell camp. Average price target is around 25, so not a ton of upside seen in this particular name. Deliveries have been shy of production targets, so far for 4 consecutive quarters. That's not a great sign. Consensus suggests that...
Wait, deliveries are shy of production. Okay, this is something that really kind of makes me a little bit upset when they compare the deliveries to production. They don't realize that. Okay, so Rivian had, so the deliveries this quarter for Q2 had 12,640 units delivered, and they had 13,992 produced. So there's always going to be a gap there because they can't produce the cars and then teleport them to the owners. It's a thing for Tesla too. They always say this with Tesla. They're like, oh, they produced more than they delivered, so it's a bad sign. What are they talking about? Because you have to build the thing and then get the thing to the customers. So there's going to be amount of travel time, amount of shipping time, and all that stuff to get it into the customer's hands. So they're always going to produce more than delivered. It can't be one-to-one unless we build replicators and you can sell products through the replicator. You can just ask for what you want. It comes and then that's it. Like that doesn't exist. So there has to be a production, and there's always going to be a gap because you have to get those cars, these pickup trucks, to the customer's hands. So the number we want to focus on is production. How many can they produce? Because they are scaling the company right now. They're trying to get to profitability. I'll go over the numbers again with their margins and stuff. Just hold on a second. But that's something I always wanted to address, and it makes me mad when they do this with Tesla, and they're seemingly doing it with Rivian as well. They somehow think that you can produce a vehicle and then teleport it to the customer's hands, so there's going to be no difference. But there's always going to be a gap there because they have to deliver it to the customer's hands. All right, let's go.
Gross margin's not going to turn positive until next year. The losses continue to kind of pile up for this company. And what I saw that I thought was interesting and not necessarily exciting if you're an investor is that the cash burn might not turn the corner until 2028. So there's a lot with this name right now, Oliver. And when you consider it in the context of its peers, names over in China like Li Auto are really, really turning the corner. Names like Lucid and Rivian are just seemingly failing to do so. Obviously, Tesla's been out in front for quite some time.
Okay, let's talk about the numbers here. Maybe they'll talk about it in a bit, but Rivian, like at first, I was kind of skeptical of Rivian. I didn't know if they could make it to profitability in time, because they're burning a lot of cash, but they do have a ton of cash. So let's see. In Q1, their margins were negative 80% gross margins in Q1. In Q2, they're negative 37%. So that is a huge difference. So I don't know if you guys remember when Tesla was in the same position, right? They were scaling their business. They were losing money every quarter, but there was a steady path to profitability. And if you look at the Rivian chart, it's just going up. So I believe that they will reach profitability, and they're going to be around. So yeah, that I've totally turned around on Rivian seeing that, because I didn't think they would make it. Lucid is another story. I don't think Lucid is going to make it at all. But I believe Rivian will make it to profitability. They'll be around. They're not going to be obviously as big as Tesla, because they're not really focusing on full self-driving or any type of like tech stuff. They're just mainly focusing on building electric trucks. And now they're coming out with their SUV version, which they're boosting production this quarter on their SUV. So that's exciting as well. But I think their main focus is producing and delivering cars. You know, Tesla has the energy business, the full self-driving, the subscriptions, all this other stuff they have going on with Tesla, the bot in the future, all this other stuff. I think Lucid is just focused on cars, delivering trucks. And I think they'll be profitable, you know, not too distant future, they'll be profitable. So I'm really excited to keep following this company, because they remind me of Tesla early on. You know, like Tesla was in this similar boat. And from negative 80% in Q1 to negative 37%, that's a big jump. So if they can keep that trend going as they sell more and produce more vehicles, the economy of scale will kick in, and they'll start being profitable. So it's exciting to watch.
2028. Yeah, I don't know if it's going to make it that far. If you got to have a lot of favorable outcomes, it feels like, in the economy to sustain, Rivian for that long. But there is definitely a lot of love for the design and the make of the car. Generally, I feel like it's very well respected and liked among the car world and buyers. Maybe someone buys some of their designs or patents, or they get absorbed. I don't know what the end result is going to be, but it certainly seems like a quarter. They've got to deliver on something, give something positive, because the other earnings have not been terrible for some of these companies in the auto space. It's been really surprising how resilient some of Tesla's deliveries have been, frankly, and those able to cut prices and make it work for their bottom line. It doesn't seem like Rivian's in a place where price cuts can work for their bottom line whatsoever, but it may be necessary, and then they get in a pickle. So it should be a fun report. Options market pretty wild ahead of this, Alex, or how's that looking? I mean, it's pretty expensive to trade this thing, right?
13.5% or thereabouts is the implied move if you look at real-time option prices. So you're looking at like $3 and some change on a $24 stock to get that math. Expect some volatility, but I mean, Palantir was about the same, and we're getting about half of that thus far today. So bear in mind, it doesn't always mean that's what you're going to get. It's just sort of what the implied volatility suggests. But I'm with you, Oliver. I guess the thing that I would say to kind of leave it here is, if you're a consumer in this marketplace, this is your price point, and you're looking at maybe a Tesla or a Rivian, what are you more confident still going to be there to service this vehicle in the next few years? I think it's pretty clear what that answer is. That would be my concern, is I buy this sweet vehicle, then the company's gone, and now I'm stuck with this thing that no one knows how to fix.
Okay. Thanks, Alex. Good look here at the report, and definitely a lot of volatility expected here when the market's assumption is for a 13% move.
Okay, so obviously these guys don't do any research. They just get story after story, and they have to just keep moving quick. But so their growth quarter for quarter is they're growing at 30 to 35% growth rate with production. So that's really good. 30 to 35% is really good. They're now losing $32,000 per car. It was way more before. So they produced 13,992 cars, trucks this in Q2, and their margins went from in Q1 negative 80% to negative 37%. So that's the big number to look at. And in Q4 of 2022, it was in the negative hundreds. So they're steadily losing less and less money. So if this trend continues, then they will be profitable pretty soon. These numbers don't look too bad. So the big question is going to be Q3. How will they grow their margins in Q3? Will it be a steady growth, like over like 43% cut, you know? So if it's another 43%, then they'll be profitable. So that's the big question. And this could be a big opportunity right now because these mainstream media guys obviously don't do any research, so they don't understand what's going on. They're basically saying the company's going to fail and to sell the stock and to go with Tesla. But I would also buy Tesla stock over Rivian. But also, if you're going to look at these numbers and you're going to do kind of a shorter term investing strategy, it might be a good time to jump in. I'm not sure. This isn't advice. I'm just kind of thinking out loud because these margins, if they can keep it going and if they could be, you know, plus even 2% and then in the next quarter plus, you know, 8%, the stock will definitely skyrocket. So it'll be interesting to follow the numbers, follow the gross margins, because they did, again, last time they went from negative 80% to negative 37% in one quarter. So similar trajectory to Tesla back in the day. So yeah, good things. They had a good quarter. Q2 looks very good for Rivian. I'm going to keep a closer eye on them. Let me know if you want me to cover more Rivian stuff. Hit the like button. That lets me know. Let me know your thoughts in the comment section down below. We've been getting some great comments, informative comments. Some of you guys know more than me, so that's great to see. Building this community of Tesla and EV stock people. So it's going to be great, guys. So subscribe to the channel, and I'll see you next time.